what do you think is most concerning about what Peloton has reported?
Well, I'll point to a few things. First is that Peloton really misforecasted the magnitude of impact from reopening economies and the resulting reduction in consumer demand, the ongoing supply chain constraints, cost inflation, and logistic challenges. So they had guided to fiscal year 22 revenue and subscriptions, and they guided down meaningfully now for next full year next year. And the biggest challenge here that Peloton is facing is lower consumer demand. They did not expect consumer demand to fall off as much as it did as the economies reopened. That is, they saw a decline or a moderation in website traffic, in their showrooms traffic, which implied that the demand for their products was moderating pretty meaningfully, more meaningfully than they thought, and that is why they had to lower their guidance. The other thing I'll add is it's not only the lower demand for their products compared to what they saw last year, but it's also the mix shift to the lower priced original bike, which is lower margins. The profitability it puts pressure on their profits. It is also puts pressure on their top line growth. So we call it the trifecta. It's the lower prices, higher costs, and lower demand.
So how should we think about Peloton's opportunity from here? We know they're breaking ground on a new factory in the United States, charging forward with expansion plans.
Yeah, I mean, the challenge with Peloton as a stock, and I'll point to both the opportunity and the challenge and what our opinion is. The challenge with the stock right now is that the visibility is fairly limited. There are a lot of macro concerns around supply chain logistics that they'll have to figure out. There's also the moderation in consumer demand. And so I think that the stock, at least in our view, will likely be range bound in the near term. But that does not mean that their long-term outlook has meaningful flaw. It's unchanged. They pointed to 180 million plus people globally in the markets that they're present in the U.S., Canada, UK, Germany, that they can address. That's about 75 million households that they can penetrate. The goal for Peloton really is to have a product that is price friendly, and they want to maximize household penetration. And nothing has changed. They have 6 million plus members. That's single-digit percentage penetration of their market opportunity. So that has not changed, and that should drive growth over the long term. But near term, there's cloudiness.
How has engagement changed and the quality of the Peloton experience?
Yeah, I mean, it is a function of reopening economies. I mean, we saw lockdowns and people working from home. So just as a data point, this quarter, they said 16 and a half workouts per month. Now that compares to over 20 workouts per month last year, this time, same quarter. And a lot of it is because people are out. People are going out and they're ready to go out. Versus last year when not only were we working from home, but we had nowhere else to go because everything was closed. That said, compared to 2 years ago, same time, still engagement is about 40% above the pre-COVID level. So those who do have a tread or a bike, they are working out more now than they did pre-COVID, which is a good sign.